Let's get into all of the breaking news happening for Tesla stock here today. And let me tell you, it's very encouraging. Tesla's next generation Model 3 is expected to feature design updates, chassis updates, and the new hardware 4.0 self-driving technology. It may also be equipped with new battery cells from CATL for increased energy capacity and range. An official announcement is anticipated by the end of this month. Produced at the Gigafactory Shanghai in China for the European market, the Model 3 has been subject to global factory upgrades and temporary production slowdowns, possibly linked to the new Model 3. Rumors suggest a switch to the new Model 3 production in China in the coming weeks. Joe Tetmeyer over on Twitter is reporting to us at the Giga Texas factory, a Cybertruck is spotted using a supercharger. The Tesla Model Y is leading in Switzerland as the best-selling car. Strong sales throughout the year still provide a significant lead over competitors despite weaker sales in July. Car sales in Switzerland are still recovering from disruptions caused by the Rona and the Russian attack on Ukraine. AutoSwiss reported that they have grown for the 11th calendar month in a row. Along with the growth in sales, there is a strong switch of customers to plug-in vehicles. Of the 10,317 vehicles sold last month in Switzerland, 3,649 of them were EVs. This represents 29.2% of the automotive market. Of the 3,649 units, battery electric vehicles accounted for about 2/3. Their number increased by 81% compared to the previous year. Supercharged EV sales nearly hit 50,000 in Australia in 2023 so far. This is up from 33,410 EV sales in all of 2022. And Tesla is by far the winner. Troy Teslike is reporting to us that to date, vehicle registrations for Tesla in Europe have reached 204,000 units. Last year, by this time, you only had 88,000 vehicle registrations, more than double what you are seeing year over year. And what do you notice about these charts? The end of the year tends to bring a massive acceleration. So if that trend continues, well, you're going to blow past last year's record of about 230,000 deliveries for Europe. You're almost above that today. So the next couple of months are going to be very exciting for Tesla, and likely some pretty big vehicle delivery beats. Now we have Gary Black updating his Tesla catalyst as of August 3rd, 2023. Number one is stable auto margins starting in Q3. The M3, the Model 3 refresh/Highland for Q3 as well. Cybertruck deliveries launching by Q4. And I find this one the most interesting. Full self-driving OEM licensing deal by Q4. Well, that's going to mean some huge upside for Tesla's stock upon that announcement. I believe the stock could even hit all-time highs off of an announcement on that scale. It will be very hard to deny that Tesla is just an auto manufacturer, that it's not a software company at the heart, and that's what's ultimately going to drive profits for Tesla. Full self-driving has margins of around 90% when you include the hardware at full self-driving's current price of $15,000. About 90% of that hits the bottom line. If you want to be a little bit more conservative and say 80% will hit the bottom line on any of these FSD licensing partnerships, that's going to mean some big dollar hollers to Tesla's bottom line, and that's instantly going to make forward-looking valuations a lot cheaper for Tesla, and it will make it a lot easier to justify $500-600 for Tesla stock. And I think that's when a lot of your bearish analysts will be forced to change some of their opinions on Tesla. Not all of them, but at least some of them. The Fed's pivot on interest rates in Q4. This one also in conjunction with what I just said about future valuations. A licensing deal will make Tesla look a lot cheaper in the future. Well, when the Fed does finally pivot, maybe actually cut rates for the first time, whether it's Q4 of this year or in the first half of 2024, it makes your valuations, future valuations, look a lot more reasonable because you can start to discount more future earnings because your interest rates presumably will be lower in the future. That should make Tesla's valuation look even better. Gary Black's next catalyst for Tesla is the $7,500 EV instant rebate. He expects that full year 2024, as well as a $10 billion share buyback for full year 2024. Number 8 is FSD Alpha V12 L4 release sometime in 2024. Now, your Alpha V12 version is expected to be the version that can go to the government for Robo-taxi approval, for your autonomous approval, where you will no longer need to have any part to do with the vehicle. You can type in your location, let your Tesla take you, and have full confidence that everything will be just fine. That's your V12 version. That's the version that could give you the Robo-taxi. And if that happens in 2024, then Tesla can pretty much instantly start to launch Robo-taxis. And imagine what that will do to Tesla's bottom line. That's the recipe to getting Tesla to $5-10 trillion plus on a market cap basis. Gary Black also expects the 25,000 to 30,000 compact vehicle to be released by full year 2025. I think this is pretty reasonable as well. He does have a $320 price target for the next 6 to 12 months. Gary Black also expects that there could be one or more OEM licensing full self-driving as it nears the level 4 alpha version V12. Now, the best way I like to think about this is 5 to 10 years from now, or just maybe a couple years down the line. If you try to look out, it's almost going to be a requirement for new vehicles to have some form of autonomous driving, to be level 4, where you can get in, punch in your destination, and go. Because at that point, a couple years from now, Tesla's going to have robo-taxis basically everywhere, right? Even on conservative estimates, if you believe robo-taxi is possible, you're going to have robo-taxis basically everywhere. Everyone's going to know about them. So you're going to have some kind of software. These legacy OEMs are so far behind Tesla, they're not going to be able to compete. So even if these legacy OEMs don't want to see Tesla doing better than them, they ultimately don't want to fail. And that's the choice here. Partner with Tesla on full self-driving or fail. That's the decision that's ultimately going to need to be made. And I think a lot of your OEMs are going to choose to license full self-driving from Tesla. Gary Black also is removing his Twitter free cash flow positive as a positive catalyst for Tesla, given the uncertainty among advertisers caused by the branding change of Twitter. As we have previously reported, Tesla bought a German wireless charging tech company called Wifferon. Tesla paid about $76 million for this technology. This is a glimpse of what this technology could look like. You kind of just roll your car over it, and it charges. While you can have your phone actually giving you the specs of how much it's costing, how much power you're actually getting, so on and so forth. So we could see some pretty big changes coming for Tesla within the next few quarters. NIO has reportedly cleared the final hurdle for its smartphone launch, which is expected to be in the third quarter of this year. And this coincides with the introduction of the new ES8 model showcased during NIO Day in 2022. In contrast, while rumors of Tesla's own smartphone project have been circulated for some time, concrete developments remain elusive. Elon Musk, Tesla CEO, had briefly mentioned creating an alternative phone last year after acquiring Twitter, now called X, after the microblogging site's uncertain status on mainstream app stores was kind of being spread. He alluded to this. We have not gotten concrete details, but Tesla's competition is doing this. Maybe Tesla could do the same thing. Now, there's reasons why or why not Tesla should do this, and we'll cover that in a separate video. Tesla stock currently sits at $260.50 per share at the time of recording this video, and the option activity on the day sitting at 36% positive order value, substantially lower than what we have seen over the past couple of weeks now. Not a great sign, but again, just one day, you can't draw a conclusion from that. We need to see where the next week or so fully trades out to see how investors are truly feeling. The dollar amount of these options, pretty small today. Only $142 million worth of trades in Tesla from hedge fund institutions, comprised of 409 individual orders. In broader stock market news, at 8:30 in the morning today, we got the unemployment rate that came in at 3.5%, right on what I estimated yesterday. Your expectation was 3.6%. So a lot of people disagreed with this, but I think the proof is here today. The markets want to see good economic data. They want to see a low unemployment rate. And some people disagreed with what I said, that a low unemployment rate would cause the markets to rally. And that's exactly what's happening today. The indexes are up almost 1% at the time of recording this video, even though the unemployment rate is falling. The non-farm payroll report came in a little bit light. This was in contrast with what I expected for the non-farm payroll report to come in about 250,000 job ads. Your actual non-farm payroll report came in at 187,000 job ads, lower than the 200,000 that we were expecting. This seen as somewhat of a positive as well. It was plus or minus just a couple percents off of analysts' expectations. I indicated anything under about 150,000 job ads would be negative. Anything over 300,000 job ads would be a little negative as well. Again, people want to see jobs. That's the bottom line. That's good news for a soft landing. The last thing that you want to see is the unemployment rate shooting higher and non-farm payrolls cratering. We did not get that today. We also got Amazon and Apple earnings last night, and Amazon looks like they saved the day. Amazon stock is up 10.5%. Apple stock is down about 3.25%. The worst day for Apple in a very long time. Well, you're having a positive effect in the markets. People are brushing off Apple. We'll see how long this lasts, ultimately, if people do get fearful. But the bottom line, Amazon had good earnings. Amazon is really a bellwether for the economy and for the consumer. The consumer is spending money. They are buying from Amazon. This is a good sign, again, for a potential soft landing. And bond yields are moving down about 11.5 basis points, now sitting at 4.07%. Lately, we have seen a pretty dramatic increase to the 10-year Treasury. A lot of this was sparked 2 weeks ago when the 7-year bond auction came in at 4.10%, which was about 30 basis points higher than what we were expecting. We have also seen this increase in 10-year Treasury yields due to the Fitch downgrade of the U.S. credit rating from AAA to AA+. This kind of sent people selling bonds, driving yields up, and it looks like today people are buying bonds and driving the yields lower. This is also having a positive effect on the markets today. Tesla stock, as well as the broader markets, are selling off into the close of trading today. That's why it's very important that you watch the next video where we will break down what's the worst case and best case for Tesla stock over the next coming months. That's going to do it for this video. Hit the like button and subscribe to the channel if you made it to the end of this video. Most importantly, enjoy the rest of your day, and I will see you in the next one.